Top three things in my notebook this morning: Japan, Japan, Russia, and volatility. So first on Japan, a couple things happened in Japan. Number one, they had to report the numbers. Number two, Abenomics didn't work. And number three, after a couple things, I would just remind you that things like Abenomics, which are trying in Russia in as much as any other place, which is devaluing the currency, does not work. So if you look at Japanese economic data this morning, real wages down 2.6% and household spending down almost 5% year over year. Now again, this is really kind of like vintage policy to inflate, right? So you inflate asset prices, but people get a tax, a cost of living tax with that. So that's not very cool. It's good for the Nikkei on the bounce, but it's not good for those poor people in Japan. Now, second thing is there's Russia. Now, if you look at the Russian currency crisis, the currency is down 14% in 3 months. Now, once this starts to happen, of course, they eventually have to do what? They have to raise interest rates. Now, isn't that fantastic? So now their currency is down in flames, their stock market is down 20% for the year to date, and now they have to raise interest rates? How do you like them apples? You know, again, history will remind you that whether you're devaluing in Russian terms, in Japanese terms, European terms, or on the pending US terms, it doesn't end well for the people. And then finally, volatility. This all ends with volatility, of course. So after all the central planners cut to zero and Russia implodes, what are you going to get? You're going to get volatility in foreign currencies. You're going to get volatility in equities. You're going to get volatility across asset classes because we are coming off the most asymmetric low in volatility terms, I guess, all time. And all time, as many of you know, is a long time. The VIX, if you're looking for levels, has broken out sufficiently above our trend line of 1134. That's on the front month. There's no resistance to 17. So looking forward to the post-month end jobs report. Don't forget that that's Friday. And again, I think the bond market's really sniffing out a bad jobs report. Watch out for that, long the TLT, long bonds, et cetera. And those are your top three things.